Hey, everybody. Today, we're going to talk about 5 ways that you could begin to immediately prepare for a housing market crash. Now, let's not get carried away and say that I'm predicting a housing market crash, but let me give you a little insight as to who I am, why I might have a qualified opinion, and we can go from there. Everybody, my name is Shannon Robnett. I've been in the real estate business for over 30 years. I've done this my whole entire life. I'm a fourth generation realtor, second generation builder developer, and I've been through some market cycles. I've been through several. This will be I think my fourth recession, right? I say this, uh, you know, like some celebrities talk about their marriages. They've been through their five, their six, or whatever. But I want to talk with you guys a little bit about what might be happening and what you can do to prepare, regardless of what you believe. This is all pretty good information. So I want to give you 5 tips that you can use to prepare for a housing downturn. Now, we've got to do a lot of research here to figure out if we're going to have one and what are going to be some of the best places to position ourselves should we do that. But the first thing you're really going to want to do is you're going to want to pre-qualify yourself for what you can borrow. What can you do? What can you get involved with in real estate and really decide what your goal is? So you're going to pre-qualify yourself, right? You're going to talk to mortgage brokers. You're going to talk to bankers, right? You're going to get your credit score fixed. You're going to do the things that are necessary to make sure that if there is this amazing buying opportunity that everybody's talking about, you're there to take advantage of it. And here's how you're going to do it. You're going to have that plan. You know, they say that without a plan, well, nothing happens, right? First you plan, then you execute. But a lot of people go, oh, yeah, there's this housing market crash coming. Bad things are going to happen. It's going to get crazy. It's going to get weird. It's going to get horrible. And that's all they do. They don't do anything about getting their credit right, getting their down payment monies together, getting all the things that are going to happen so that they're ready when this thing happens. And I guarantee you, there will be a housing market crash. I just can't guarantee you when. I don't know if it's going to be in 2000 or 2022, 2026, 2029. I don't know. I do know that we're in a recession. I also know that in the last 4 or 5 recessions, there's only been 2 where the housing market has actually done anything negative. 2008 obviously being the worst, but the last one was barely 2%. So that's what you need to do. First thing, right? You need to understand how and what you're buying, where you're going to do it, and what's going to be your plan of attack when this thing comes. Because the reality is, what most people forget is that when housing markets crash, banking gets more difficult, right? Underwriting deals gets more difficult. But what happens in that housing market crash if you're in the single family? Everybody switches to rentals, right? So the rental market goes up, and you can prove that with history. Which brings me to my second point that you're going to want to do if you're going to want to make this massive move when the market crashes. First of all, you're going to pre-qualify yourself. Second of all, you're going to underwrite your particular market. You're going to go find your market and you're going to go historical on it, right? You're going to go back 5 years. You're going to go back 10 years. You're going to track market trends. You're going to look at crime rates. You're going to look at inbound traffic. You know, U-Haul puts out a lot of really great information on where to get data. Actually, they aggregate a lot of data that tells how many people are moving in and out of a state, right? We just learned that in 2021, for the first time in California's history, that state lost people. Like, it didn't lose them like Where's Waldo. It lost them like they moved out. There was more people moving out than moving in. So one can deduce that vacancy rates in California will be easing, which isn't necessarily going to be good for the housing market, right? So these are things that you can do. I'm not picking on anybody, but Chicago's having a real hard time with crime right now. So you can see that outbound traffic in Chicago, that's why Chicago has dropped a ton in inbound traffic or outbound traffic. It is no longer a preferred state to move into. In fact, it is left the top 10 by a long shot. Illinois is down in the number 40. Okay. So it is way down the list of places you might want to invest. Doesn't mean you can't, just means it's going to be a while before you really see a resurge back in that area. However, I'm on uhaul.com right now, and I can see that Texas was the number 1 state, up from number 2 last year. Florida was number 2, up from number 3. One of my favorite markets, Idaho, is number 9, up from number 30. One can deduce that that is a thriving market. That's also going to be one that during a crash, probably going to be doing better than most, so that you don't have to worry about what happens to rent prices crashing, right? So you're going to underwrite your market. You're going to get with your crime stats. You're going to figure out what's going on. You're going to see what the industries are. What's moving in there? What's happening there? I was at a craps table the other night trying to entertain myself, and I was talking with a guy who was from New Jersey, and I was thinking, New Jersey, man, nothing's going on in New Jersey. High crime, high taxes, nothing's going on. He says, you might be right on a couple of those things. But however, there's a lot of tax incentives that are having a resurge, and Netflix is moving a lot of their stuff into New Jersey. He happens to be in real estate development. He's doing stuff in New Jersey. Amazing things are happening, right? So if you know your market, you can find areas, even in a decreasing market, where you can find good deals and you can find things that actually make sense by getting into the tax incentives and things like that. But the third thing you can do is you can develop partnerships. Why? Maybe you're really good at talking to people, getting them to understand that real estate is a good thing, talking about taxes, talking about these kinds of things. And maybe you're not really great at being boots on the ground in Cincinnati about this, about that, about the other. Or maybe you're just really not. Maybe the genre you're going after, you see the value of Airbnb, but you're not really good at the operational side. So maybe you're making partnerships. Maybe you're putting things together. Maybe you're talking to people. You've got somebody that's really strong in finance, and you're putting some stuff together over here, and you're putting some stuff together over here, and you're bringing together partnerships and ways to work together, and you're multiplying your talents. Because at the end of the day, it's multiplication of the ability to reach people, to influence people, to be in certain markets, to do certain things. All of those things are going to be of value, but you've got to create those partnerships. You've got to create those conversations, and you've got to bring that to fruition way before you need it, because when you need it, if this market crashes, you're going to want to move quickly and decisively in a known fashion with people that you have built time with that you can trust. So at the end of the day, we have 3 things. Pre-qualify, underwrite your market, develop your partnerships, right? Now let's look at rent trends. Number 4, if rent is flat, everything in the market, everybody's talking about the market's gone nuts. The market's gone nuts. The market is this. The market is that. If you're looking at your market and your market trend has been flat or 5% over the last 2 years, that's normal, but that's not hot, right? So you're going to want to really understand what the rent trends are, right? One of my favorite markets, again, is Idaho, right? Idaho has jumped from number 30 to number 9 on inbound traffic. Now, this is based purely on numbers of units moving in and out. And if anybody knows Idaho, there's only about 1.8 million people in the whole state. So if we're ranked above New Mexico, means we're probably doing pretty good, because New Mexico's got more people than us. We're ranked above Wisconsin. Wisconsin's got quite a few more people than us. So what is happening with our supply and demand? And supply and demand really has a lot to do with rent trends. The less supply, the more the demand, the higher the rent, right? So you're looking at that going, hey, what was the inbound traffic? What's the ability of the local community to create more, right? Because if we're adding to people, we're driving down our driving down the occupancy rates so that we now have driving down the vacancy rates so we have very little occupancy available. Those are things that are going to push prices quickly, and they're going to create rapid growth in rents. But if we're supplying the market and we're pushing more chips into the center of the table and we're getting higher and higher, and now all of a sudden we know we have the vacancy of 2%, but we're creating and we're importing 4,000 people a month, let's just say, and we're creating 5,000 houses a month, that means that we're slowly catching up on this vacancy rate, and we're pushing those two to where we're going to have a healthy market with 5% vacancy, which will stabilize rents and stop the meteoric rise of those rents. But if you don't know what is happening in those trends, you're not going to see that, and you're not going to be able to dig deeper than yesterday and go, hey, we had 12,000 people move in, we have 2% vacancy, yay, we've got 14% rent growth, and this is how the market works. That's not enough to figure it out. But once you understand those rent trends, and you understand going back 5, 6, 7, 8, 9 years where we have normalcy in the market, and you see where these rent trends are going, you can see how those rent trends can be played out because COVID had an effect on things, supply chain had an effect on things, interest rate had an effect on things. Now all those things are kind of going back to something that more emulates what's normal in our markets. We can then figure out what's next, right? So when you understand that rent trend and you go, hey, we're going to stay undersupplied in this area for 2 or 3 years, even though interest rates are going up, more cash is being funneled into the market, cap rates are easing, but we still have demand. We still have pressure. Or you could look at it and go, nah, it's pretty close, right? So when you understand that, then you're getting really close with your 4 trends, but that also that rent trend might help you to understand when you're pre-qualifying and underwriting your market that your particular market that you live in might not be your best one. You might want to look somewhere out of state. You might want to look somewhere down the road. You might want to look somewhere out of the country. But that's entirely up to you. And then when you get there, you can underwrite that market. The 5th thing you're going to want to do is you're going to want to understand the long-term perspective. I had lunch with a guy and his beautiful wife this last week, and he called himself a Buffettite, right? He studies Warren Buffett, and what he looks at is long-term holds, long-term trends, and long-term things. It's amazing how many people have looked so short-term in today's market that they've only looked at what's happened to real estate in the last 2 years, which is part of what causes the spike, which is part of what may cause the crash when people look at that and go, well, I bought it for 200, it went to 400, it's starting to fall, I better hurry up and sell it so I can gather some of my profits, and they chase that thing to the bottom, still get out at 200, but did they help the market? But let's go back to my point. If you're looking at real estate, don't look at a 3-year window. Don't look at a 3-year window for the past, and don't look at a 3-year window for the future. When you're looking at real estate, look at a 5-year window. Look at a 7-year window. Look at a 10-year window. Look at those trends, and if those are acceptable for you, then real estate is a great option. And when you've identified those things and you've pre-qualified your market, you've underwritten it, pre-qualified yourself, you've underwritten your market, you've developed your partnerships so you know where you can get the things that you don't do best. When you've developed a matrix that you can identify the rent trends, where things are going, how things are going to continue to happen, and then you can understand the long-term goals, because a lot of people are doing 25, 45, 55% returns annually on real estate. And while that's fantastic, that's not historical. So if you go into real estate thinking that's what you're going to get, you're going to have problems, and you're going to continue to see where that's not going to work out the way you thought. And that's going to lead you to feel like you're not getting the kind of returns that you were supposed to, when in reality, these returns aren't normal. So to recap that, you're understanding that long-term, are you in it for cash flow? Are you in it for appreciation? Are you in it for generational wealth? And if so, don't take a short-term approach to those things, because cash flow takes time. Markets take time to mature. It depends on what part of the market you got in on the cycle, where you're going to go from here, how you're going to get there. But if you've done these 5 things and you've done them successfully, you can be successful in any market, let alone one that crashes. But if you've not done these 5 things, I don't care how hot the market is, you're not likely to be able to create repeatable results, because you don't know what you're doing. You're throwing darts at the wall and going, hey, I bought this stock because of this guy told me that. I bought this house because the realtor told me so. I bought this. I did Airbnb because somebody did this. And you haven't figured out what your market is. You haven't figured out the trend of what really brought you to success. So, guys, take this tip from me. If you want to connect more, go to my website, shannonrobnett.com. We can talk more about what we can do to help you be where you want to be in the real estate market that fits best for you and identifies your goals and meets your return criteria. First of all, we've got to have a conversation. So, shannonrobnett.com, let's talk about it. Other than that, guys, thanks for listening.